Hey folks, thanks for tuning in to my GTA Market Pulse video update for the month of October. My name is Sam Najjar, and this month's update is going to focus on two important messages. Message number one is where is our market at today, and message number two is what can we expect going forward. So let's start by talking about message number one, which is where is our market at today. As we're discussing this, we'll look at a few slides and some important stats as well, namely the months of inventory, the total sales and listing volumes, as well as average selling prices. So let's get started by looking at the months of inventory stat. Months of inventory, for your benefit, is defined as a measure of how fast all the existing homes on the market would last, assuming no more new listings are added. So what does that mean? A market with 2 months of inventory would mean that in a given month, 1 out of 2 listings will sell, and so on. The higher the months of inventory figure, the slower the market. The lower the figure, the more active the market is. This next slide shows you months of inventory across the entire GTA and includes all the home types. As you look at the slide, you'll notice that months of inventory in 2017 reached its lowest levels in the first 3 months of the year, which is when the market was red hot. Then activity slowed right down, with months of inventory quickly climbing month over month. We all know why that happened. The provincial government intervened with their Fair Housing Plan in April. There's been a number of interest rate hikes by the Bank of Canada, and the federal government this year tightened the mortgage qualification criteria. When we look at the months of inventory information for 2018, we'll notice certainly a lot less fluctuation when it comes to months of inventory, with the number hovering around the 3-month mark for the most part. Now, as I've mentioned in a previous update, if you have months of inventory between 4 and 6, it represents a balanced market. If it's above 6, it's a buyer's market, and it's below 4. If it's below 4, it's a seller's market. So even with all of the changes that we've been having since April last year, we're still in a seller's market territory. It may not be as hot as the early months of 2017 when the market peaked, but frankly, that was not a healthy market. It was unsustainable, with prices going up drastically from one month to the next, and operating in such an environment is not good. We want to be in an environment where prices are increasing gradually, and that's the kind of environment that's healthy for both buyers and sellers. Want to note that months of inventory does vary from market to market. For example, Toronto versus Mississauga, from community to community. For example, Port Credit versus Meadowvale, Mississauga, and between one home type and the next. For example, detached versus condos. If you're interested in those numbers for your local area and home type, I'd be happy to provide them to you. When we look at sales volume in this next slide, you'll notice that total sales this September are actually up by 1.9% from last September. We definitely have been seeing sales go up year over year for the last few months since June, even though total sales in 2018 are down when compared to 2017 by about 18%. But the trend is up, so hopefully it'll continue to go up. Moving on and looking at average selling prices in the GTA, you'll notice in this next slide that average selling prices continue to be strong, with a year-to-date average price of $796,000. Again, even though this price is down from 2017, it's up from the 2016 levels. And let's remember that 2017 was an anomaly. The prices for the last few months in 2018 when compared to the same months in 2017 have been up, so hopefully the trend continues to go up. So what's in store for us going forward? The trade friction that existed between Canada and the US recently definitely put a lot of psychological strain on Canadians, affecting their home purchase decisions. There were worries about job security and the impact that a failed agreement would have on our economy. But now that the agreement is settled, expect the real estate market to receive a boost. Consumer confidence is up. More people are now likely to engage in real estate transactions. Prices have been up month over month in the last few months. Months of inventory, as I mentioned earlier, are in healthy ranges, and interest rates continue to be at historical lows, even with the recent increases in borrowing rates. So hopefully it'll be a good market, as all the indicators are that buyers are adjusting to new realities of the market. Obviously, I'll continue to keep a pulse on what's happening and keep you abreast of the changes. on all fronts, and I'm also here to answer any questions that you have and to help you navigate the buying and selling landscape so that at all times you're making the best and most informed buying and selling decisions. That's it for now. Hopefully you found this video informative. If you did, please like it and share it. You can also subscribe to my YouTube channel or follow me on my social media pages, Facebook, Instagram, Twitter, LinkedIn, and that way we can stay in touch, and I can answer any questions you have and hopefully be part of your buying and selling experience. So that's it for now. Until my next update, take care and all the best. Bye.